ASML is one of the most important companies in the world. It's down over 7% over the last 5 days and had a massive 13% drop on Wednesday. And it's continuously dropping even now after recovering a little bit. And if we span out over the last 1 month, it's down. 6 months, it's down. Year to date, it is up by a very small amount of 6%. And if you're looking further by the last 1 year, it's down by nearly 24%. This is a massive drop for a company which, if you look at all time, it looks like a compounding machine, which it is, as it's also a monopoly in its own right. Through its expensive machines and high quality business, which makes it very difficult for any other company to compete with. However, before we look at what caused this massive drop, it's important to know what the business does. ASML makes money by selling machines that make semiconductors, which these machines cost about $150 million each. For this, you need lots of intelligence, lots of data, and obviously very strong patents, which this company all has. And because of the price and the level that this company has, it has really difficult barriers of competition, making it one of the very few companies which sell these machines. And for the quality that they are, they're basically the only competitors in this market, making them a monopoly and nearly impossible for any other companies to compete with. They also are very important as they're selling to companies like Intel and Samsung, who are leaders in the semiconductor business. And also, semiconductors, as you know, are fueling AI, which make these very important for the current narrative of the AI boom and everything like that. And this makes ASML one of the, if not the most important business, except maybe Nvidia, in this entire AI boom. And it also makes money through software and software updates to help clients make improvements in chip sizes and performances. And over the last 20 years of machine, so a machine of theirs usually lasts about 20 years. Their software updates can be a significant source of company revenue, and this can make some consistent revenue for them, as any updates and stuff like that can create more of a subscription sort of business for them, or just a toll business for them, as these companies that hold the machine from ASML would like to have stronger software for their machines to create better semiconductors. You may be wondering why ASML dropped so sharply. Their earnings were a beat, about 12.2%. Their revenue was also a beat, about 2% in the recent Q2 2025 earnings. However, when we do look at why they dropped, is because ASML Holdings, Dutch supplier of chip equipment, said it can no longer guarantee growth in 2026 amid the uncertainty of President Trump's tariffs. So a big reason for this is because of an announcement of Trump's tariffs affecting their revenue and their future growth. However, this doesn't show at all in their actual numbers and their actual growth. And since ASML has had very consistent growth and their monopoly, I don't see this as big of an issue as others do. And in the worst case scenario, this may act as some short-term issue where the tariffs, it shows that there's about 30% tariffs on imports starting August 1st. However, this is still, in the worst case scenario, it'll be some short-term issue which may be lifted at certain points, because ASML, being a monopoly, doesn't have competition, first of all, and because of that, the biggest issue to it is regulatory, which this is something which will likely affect it, but the extent to which is unknown. Even according to Morningstar, they do still believe that they're confident in the long-term growth. However, the tariffs are affecting the short and medium-term estimates for ASML, which is why they're reducing their price estimate. However, they still appear undervalued, and the quality of the business still gives them strong confidence for their long-term growth. Another point that I want to show is that the return on investment, which is the ROI, is what they invest in and the income that they get from there, has actually still gotten stronger and stronger year by year, and is extremely high for most businesses of 41%. And this is incredible, and I believe this again shows how good of a company ASML is, and why even at this point of weakening possible earnings in the tariff fears, that ASML is still a really good buy right now. Although usually I like looking at the free cash flow per share, in ASML's case, because they get paid in full delivery for their EUV machines, which cost about $150 million, their free cash flow per share does look very inconsistent. So that's why it is better to look at earnings per share and even better revenue, which looking at here, it has been going up consistently over the last couple of years. And looking at forecasts, they are expected to have significant revenue growth over the next 4 years, reaching about $50 billion per year. And when looking at the price to earnings, which is also very important here, their price to earnings is also not too expensive in this scenario. And their earnings per share has exploded over the last since 2016 from $3 per share all the way to nearly $20 per share, a nearly 600-700% boost. And their earnings per share is also expected to continue to grow up to about $41 per share, which is extremely impressive. And if they can reach that level at this current price, they'll be under 20 price to earnings. And for a monopoly and a company like this, that's an astonishing price to pay. So I'm expecting that this price, the price for ASML, may go to 1,200 at least by 2028, which is almost a double. Maybe in 1,400, 1,500, which would be a double by 2028. And with that scenario, I do believe ASML is a great buy right now, has amazing fundamentals, is a monopoly, possibly one of the strongest monopolies because of their need for high intelligence and their strong patents, the extremely expensive machines that they need all are able to produce. ASML is a great company, a great buy right now, and I do already own this stock. I am buying more of it at this price. Under $750 does seem like a steal. And if it does drop further, I will buy it. I did start buying this company back in September. I bought slightly below 800, and I bought significantly in this company back in March at about 605, which I believe was an extremely cheap price for a company of this quality. And even at this price of below 750, it's amazing. And I'll keep it. If you don't buy it at this price and believe that it should be even cheaper, it may be a slightly lower price to earnings ratio. I will say this, that this company does have the potential to go really high, as if you do look at its overview, over the last 5 years, it has had points where it jumped from all the way to 1,000, and from the 2022 crash to their all-time high, they did jump 150%. So this company does have lots of potential and lots of growth. So I will watch out for that, and I do believe this is a great opportunity, and this company can beat the market over a long period of time.